Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily NVIDIA report for Tuesday, August 20th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I'm going to jump into this one here, and that is to say that last Thursday we settled above this descending two-thirds speed line, at which point I'd mentioned how 153.15 should be considered a 1 to 2 month target. Could be sooner than that. I do think the 140.76 high is likely over the next couple of weeks. I'll get to that in a moment. We could double top here for a week, possibly two, fall away perhaps. But if we were to close above 140.76 on the first attempt, this could be within 2 to 3 weeks that we reach 153.15. And it is indicated, and it was indicated actually on Thursday's close above 118.11, that descending two-thirds speed line. Now, there is a point I also want to bring up, and this got a little confused. I think I read some of the YouTube comments, and some were saying, well, what we don't understand. What should we do? I'm not quite sure what you're saying, because I was also then incorporating the short term into the framework, which is to say that there was the possibility of topping out for the day at the 126.90 rising channel bottom. It was a little lower, actually. I forget exactly where it was on Monday, but that was a possibility. I'd mentioned how we could top out there for a day, fall back within several days back to 118.11, that was possible. We could fill that wedge out for a week or two, but if you're a 1 to 2 month, 2 to 3 week, 3 to 5 week swing trader, if that's your normal time horizon, then I stand by obviously the longer term buy signal. That should not have been confusing, but I can see how this could have been confusing, where I was saying we just might top out here for a week. And is this a sellable resistance? No. If it were a sellable resistance on a weekly basis, I would have had it labeled as such. 126.90 would have been considered 3-star resistance. And then the indication would have been a settlement above 126.90 would have taken us into the 150s, and back below 118.11 would send us south. But no. We are in the midst of a buy signal that has been in play now for 3 days above 118.11. And yesterday's settlement, frankly, back above the 126.90 formation is consistent with that, underscores that buy signal, validates that buy signal. We didn't top out there and fall away. We pushed through it, which was my ultimate expectation. I didn't know if it was going to be Monday or later in the week, but here we are. So 126.90 can contain daily selling pressures, and above which 135.58 is in reach today. 135.58 is the high, all-time high settlement price that was put out back in June. It can contain daily buying pressures and 126.90 daily selling pressures. And so if you're a day trader, it really is essentially buying 126.90 and selling 135.58. Would I go short at 135.58 overnight? I don't think so. I think we could top out here for a day or two, but I'm not expecting a weekly high here, as indicated by the session containment labeling. It would be a settlement above 135.58, which may well happen this week. That would then signal 140.76, which is that June all-time high. And there we can top out on a weekly basis. So holding above 118.11, we basically have a 1 to 2 week objective at 140.76 and a 1 to 2 month objective at 153.15. That 1 to 2 months once again narrowed to within just a couple of weeks following a settlement above the 140.76 June all-time high. That kind of covers the upside. I will mention one more thing, that 129.52 is still a valid day tradable level. We pushed through it late in the day, but it is the low of the high. So when we put out that all-time high in June, the low that day was 129.52, and we closed above that as well. Another slight sign of strength, 129.52. That could be it to the downside, perhaps. 129.52 able to contain intraday lows, and above which 135.58 in reach, where we can place a daily high. Once again, closing today above 135.58, an eventuality over the next week or so would then signal 140.76, probably within the week. And you can see possibly within just another day. If we close today above 135.58 today, Tuesday, we could see 140.76 on Wednesday, where we could place a weekly high. If you're long now, having settled above that 118.11 speed line, you could take some profits at 140.76, but I think holding out for the low 150s and climbing is not a bad trade right now. I think that is the likely outcome. Maybe you already reached for 150 or 160 strike out of the money calls that don't expire for 3, 4, 5 months out, because this is a 1 to 2 month play. Let's take a look at the downside. It's about as simple as, breaking 126.90 does allow 121.63 intraday. And I don't know if we'll see 118.11. I mean, we could. So if we break 126.90, especially if we open today below 126.90, we could see selling pressures right out of the gates that would allow 118.11 on an intraday basis. 118.11 is really part of a range of support now that ends at 117.33, a newly formed rising channel bottom. So this area, if given the opportunity to buy today, is a solid zone of support that can contain selling once again into possibly through September trade, and above which 153.15 remains a 1 to 2 month objective. Now, if we were to close today, that would be a huge surprise, below 117.33, I would expect 109.74 probably the very next day. And, I don't have it drawn out because it's a new formation, but it would look something like a trend line across these highs and then a channel bottom at the same angle. It would take us into the lower 80s, and that would be the objective. If we close below 117.33, it would be a low 180s objective and dropping daily. And, we're not committing to that yet as a formation because we're still sort of pushing onto new 3-week highs. And, if the market were to back away, we would get busy as to what we would expect below 117.33. But if there's a surprise sell up today and we close below 117.33, no good reason to be long NVIDIA, not only through the rest of the week, but I think through the rest of August trade. I would expect 109.74 tomorrow, and over the next 2 to 3 weeks, I would expect the lower 80s and dropping. I hope that all made sense. I think I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of our 5-day free trial. We offer 2 stock picks a week, daily Triple Q, daily SPY analysis. You don't want to miss it. Triple Q analysis has been right on the money for the last couple of months. The June high in NVIDIA and the recent low were totally correlated in terms of the timing with the Triple Q's behavior. And the Triple Q tested a significant classic chart formations the entire time. I'm going to leave it at that for Tuesday's NVIDIA report. I'll be back tomorrow with Wednesdays. You have a good evening.